commentary for Monday, the 8th of December. We have one more planned for the 15th, and then we're going to have 2 weeks off. Our next one probably will not come until January 5th. So that's 1, 2, it's like 3 weeks from from today. We will have everyone that's currently registered, we'll re-register. It'll be a new login and password, so to speak, or a new link would be a better one. We'll have a new link for everyone to attend our commentary. We'll make sure we're ready to go, and it looks like the 5th of January will be our next date to have our commentary. Most likely that 5th of January, we're going to be going over what we see as our next opportunities in the next year, and we're going to give out to you guys our spreadsheet on potential price targets for 2026. With that said, what a great return for November, which the S&P only had it up 0.13 from Y charts. And we seem to keep rolling for December of 2025. We've got some amazing opportunities here. Have some amazing opportunities with some stocks as they're running into the end of the year. A lot of this is window dressing. Can't spell. Window dressing, which is nothing more than funds and money managers putting positions into portfolios to act as if they've been there all year. It's stupid. It's really one of the dumbest things in regards to our industry is seeing this type of window dressing on money managers when they're way underperforming the market. And I'm not saying every year we always outperform. There's some years where we don't. We seem to catch up after our January earnings. But again, remember, it's the process. The process is what makes the opportunities. So I'm going to say it. The process gives us the opportunity to have the 30% plus gains in any given year. And there's some years that we're in some things that might take multiple years. But yes, we are exiting Micron for most over a 2-year period of time with a 500% real return. The good news is you only get taxed on about 200%, 250% of that will be roughly a long-term capital gains. 75% of it will be a short-term capital gains. Another 200% you've already been taxed on, so you're good to go. Pretty neat in regards to that. Bank of America looking to get called away at 52.50 with a dollar, I think it's 101 of credit. Reason why, I've been asked this by a couple people. I thought I mentioned it over last week. I'm going to call them big banks seem to be going down right after rate cuts. And again, I worked on Bank of America 2 or 3 weeks ago. The high side going into next year is about $62. It'll cost us about $4.60 to 80 cents to protect with puts, which means we'd be looking at about a $2.20 potential profit going into next year. Bank of America is not looking like a great opportunity, but Key Corp, or regional bank usually do much better with rate cuts. Plain and simple. A muted day to day. In fact, pretty neat. Please check your accounts. Most of you will find out that you're up slightly by about 1/3%. Awesome when the S&P 500 was down a negative 0.35% today. As we're looking, most accounts were slightly positive up to about a 0.35 positive return, which is always fun to do in a relatively down day in the market. Our expectation in general, and model gets that, it's a great question. Our expectation in general is going to be flat day tomorrow, and the market will react to the FOMC rate decision. Most likely, we are going to get a 1/4 point cut, but the trajectory, which again should be data-based, which they've done a pathetic job of basing it off of data. The trajectory is basically saying, hey, no more rate cuts till the new president comes in, and then we're going to get cuts like there's no tomorrow. It's very interesting. As I post this, I want you to read the FOMC briefing big picture. And I find it very interesting because once again, they completely contradicted themselves. I'm kind of getting disappointed with the briefing picture that they don't have the guts to take a stance. The summary, several voting bank presidents lean hawkish, creating a challenging rate cut drop for the FOMC early in 2026. That's not necessarily true. There are two. One is the chairman, who's pissed off at Donald Trump. So data dependency tells you, in all honesty, they should have been cutting rates way before they started. Again, how about a year late and 1.5 percentage points behind? Potential turnover among Fed governors as 2006 unfolds is apt to lead to many more dovish-minded class of governors. Duh, again, we're behind the 8 ball. And it's a very interesting article as they talk about who might step in as the chairman. They have some pretty good remarks from the new, some of the new chairs that will be moving in. The reality is that if you're following the data, we are behind. We're behind the world for the most part in cutting our rates. We have a pretty strong dollar that again should be weakened a little bit by rate cuts. It's a very good article for information on you guys. And again, with all due respect, I do think that for lack of a better term, unfortunately, I do think that the briefing.com is doing more and more of playing the middle of the road instead of taking a stance. We will probably have a full percentage point to a percentage point and a half cut happening next year, but it will happen June through the end of December. If you follow the numbers, GDP is doing great. Inflation is coming down because we're basically, the presidency or the administration is cutting energy costs, which leads to all other costs coming down for the most part. And then last but not least, we do have more and more bigger corporations, not clientele, bigger corporations that are basically announcing layoffs, and layoffs coming more towards the beginning of next year. So there's the short and the skinny. Okay, a couple people asked this, and I think it's a pretty good question. I'm going to put it down in our questions section, but basically, why do some banks do better than others with rate cuts? I'm also going to go hikes in there because they kind of run around together. When they seem to have the same business model. Because they're a bank, right? So when I look at banking, I think banking is involved in primarily these areas. When I think of banking, first thing that comes to my mind is retail mortgages, commercial mortgages, investing, and that's like stock market, 401k type of stuff. That's investmenting. I'm going to call investments. No, let's just call it investing. Mergers and acquisitions, which is a huge part of banking. IPOs, international loans, and then we're going to call it regional banking, which is more or less the credit unions and so forth. So those are business models. And for lack of a better term, the big ones are in the M&A, IPOs, international loans, and retail mortgages. Regional seem to be more retail mortgages, commercial mortgages. A couple are moving to investing. Regional banking is the commercial loans or the lending of just money without asset-backed, well, without it being asset-backed, I guess the best way to say it, for all the small businesses that are throughout the United States. So the short answer is each bank has different parts of these opportunities within the banking system, and that's the difference between it. My biggest concern is big banks are more likely with a shrinking spread. And again, that spread, when the interest rates are between 5 to 7, they've got like 50 to 75 basis points of money they can make within that spread, 10 to 15%. When it shrinks down to 4 to 3 to 2.5 to 2, there's no spread. The spread comes down to 1/10 of a basis point, or the 1/10 of 1%. So big banks are more likely to see a shrinking spread. Their money goes into the Fed savings, would be the best way to say it, or other forms of investments than loans. And that's where we saw, I mean, for a while we had it was really hard to get a loan, even though interest rates were down to 0.5%. It was easier to sit it in the Fed's rate, and with the funds just to sit it there, because they'd make more money over a longer period of time sitting with interest from the federal government than they would on the spread interest of a loan. It's almost like some banks were saying it wasn't worth the risk for the interest they were going to charge for that first 7 years versus the value of the home. As home prices kept going up, banks were expecting a crash. Nice to see that they missed that one. My home is definitely down from the highs, but boy, I'm shocked at how high that my home price is out here in Utah. So basically, this week's going to be based on our interest rate cut, which we're probably going to get a 1/4 point, but unfortunately, we're probably going to be sitting tight for at least the next quarter. And if we see or hear Powell being very hawkish, very uncertainty, we don't know what's going to happen with trade wars, tariffs, all the BS that we already went through a year that we actually pretty darn good. If that's not to follow the data, the market will not like the fact that we probably will be 6 months out until we get the next rate meeting, which is going to be June. So little unfortunate, but that's the way the cookie's going to crumble here for our markets. With that said, Meta packed up 15%. NVDA now allowed to sell the 200 series Blackwell chip into China. So guess what's going to head up higher tomorrow? NVIDIA. In fact, after hours, it was up $5. Let's take a quick check and see what it's going to be for. NVIDIA after hours right now is at $4.35, 2.34%. Man, it got all the way up to 91, almost 92 after hours. But it's going to be very interesting to see NVIDIA and technology that typically doesn't necessarily react to rate cuts in a negative way or rate hikes in a negative way. So it'll just be interesting to see on where we're at in the near future. And the last question, how did you see that, by the way? I think that just came out. That's shocking. So Dave actually just asked, he said, the Trump ban on wind power projects, kind of funny, overturned by a federal judge. So my thoughts on that. That just came out 4 minutes ago, and I'm just seeing it come across I just saw it come across on CNBC, but David, I haven't seen a lot of it. But here's my suggestion. Look up on YouTube I should know this and I don't. I want to say it's Oil Man, but that's not what it is. Here I am put on the spot and I can't remember the name of the show. What I want you to do is look up Landman. Look up on YouTube Landman and wind maybe I can find it. Wind power. And I've talked about it before, but please don't think that wind power is a bunch of great, clean, cheap energy. It does take oil to keep them winterized, to keep them running, to keep them greased. Talk about a really poor thought process. Just on the cost alone, it's going to take about 139 years to recoup what it cost for every wind turbine that you see out of there. And then when you go through how much concrete it takes, just look up on YouTube the Landman wind power as he describes wind power to their lawyer, who is a clean energy gal. There's nothing clean about solar or wind power or battery power when he looks at what it costs just to get it all up and going. So, Dave, that's my best example for you right there. When you take in the maintenance, you won't recoup how much money and cement and oil it costs just to keep those running. You won't recoup it in the 150-year time period that it would take to roughly pay for itself once you count in maintenance and so forth. So I don't know. I haven't read the article, so I don't know what else to say about that. All righty. But I will try to find the link and stick it in here for the YouTube. Earnings, Micron on the 17th. We are hoping to get called out here on the 15th. No, we're hoping to get called out on Friday, which I think is the 12th, right? Should be called out on Micron on the 12th. We do have bull calls in place. After market closes. We do have bull calls in place as a stock replacement strategy. It's a leap bull call, and we're taking some profits off the table. We also have another bull call for people that I think were 185 230s that may not have been able to afford the stock at the time that we were running our Micron positions. All right, going to keep going through. Pretty quiet week for the most part. I do think our markets are going to end higher, even with our rate decision. It won't be significantly higher, but it'll be a higher to pretty flat week. Obviously, Dow Jones Industrial Average is technically bullish, but as you can see, it's been flat for the last 2 weeks. The S&P 500 been pretty flat. Kind of looks like it's turning over there, hitting that 6,850-ish range, maybe the 6,900. I still do think we'll finish at 7,000 at the end of the year. Bullish on the NASDAQ, but again, it looks pretty flat, especially when we look at the RSI. My votes were a 3% return in December. That gets us right up to the 7,000 mark on the S&P 500. Not very many earnings, but we have AutoZone on Tuesday, Adobe and Oracle on Wednesday that I'll be paying some attention to. Costco on Thursday, and Broadcom on Thursday. So we do have some big movers there in the technology retail world. Economic reports is still kind of jumble as we're doing catch up. Tuesday, productivity and labor costs. Wednesday, wholesale treasury budget, employment cost index, but the FOMC meeting will rule 2 o'clock Eastern Standard Time, 12 o'clock Mountain Standard Time. We'll find out exactly what's going to happen by way of a rate cut, but more importantly, the commentary afterwards on the dot plots moving forward is where the market's it'll make or break the markets for the day. Initial claims communications trade balance on Thursday, pretty bleak Friday, and no economic reports. We're trying to catch up. Still letting things run. I have an interesting article on chip maker Marvel is soaring after earnings beat. Here's what analysts had to say. That has fueled our run and why we're still excited to be in Micron. Yes, we're taking profits, but we have stock replacement strategies in place to have it run all the way up to 300. But I'm looking for like-minded thought processes. Marvel's so small compared to Micron. Just feel free to read through this and look at where Marvel has good opportunity running into the future. We might play some more Marvel going into the future instead of Micron. Little bit on silver. Silver, never thought I'd get to 58. Never thought I'd get really above 53. But all you guys that received our silver coins over the years, that is pure silver. It's worth at least $58 and change right now. Someone asked, well, can I sell it? You could. You go into a pawn shop and you should be able to get probably $55 for every coin you have. They'll probably take $3 off the top or $3 off the spot. They might actually give you the fair value for it. So if you'd like some extra cash for Christmas, feel free to go spend those Hurley investment coins. Or another thought process behind it is, hey, hold on to them, and if the world goes to hell in a handbasket, you've got something to trade for some food or some water, something like that. Bullets, trade it for bullets. NVIDIA has a cash problem, too much of it. Pretty interesting is they bought a stake in this chip design company, Synopsys. Another article here to see just how hard it is to find more opportunities to make money. This also explains why maybe Apple has been a little late to the show, as they've been a little fearful on spending a lot of their cash hoard. It surprised me. Well, how would I say this? It would be surprising to see Apple start to make some more, I don't know, start to be able to do something with their cash hoard. Apple's so far behind when it comes to artificial intelligence. Siri kind of sucks is almost your best way to say it. It just doesn't do very well. I would be interested to see maybe NVIDIA, some of their cash hoard, pay a higher dividend. Their dividend is bleak. It's next to nothing. It's what? Pretty sure that's NVIDIA. Let's see. Yeah, NVIDIA's dividend is 4 cents, 0.02% of the price. Man, NVIDIA, maybe hike that up to 0.5%. More people would buy more shares. How did Meta gain so much? Well, here's a little interesting aspect on Meta. Yes, they're gaining because they're going to cut significantly on the metaverse. They're not going to let Zuckerberg throw billions of dollars to something that's not producing. Boy, calls went up to 800 pretty quickly on the metaverse. Rosenblatt, not really important, but I love a company that has a $1,117 price target on Meta. We're going to keep using those stock replacement leap bull calls, and we're going to make a lot of money on that. Kevin, why don't you do more of these alternative investments like Yield Street, that's now calling itself Willow Wealth, that inevitably is a real estate based, asset based type of alternative investment? Well, because most of them lose a ton of money. Here's a great example of Yield Street. A bunch of loans wiped out, and all of a sudden they're now saying, hey, we're going to call ourselves something else. Bankrupt Yield Street, rebrand yourselves as Willow Wealth. It's just, I can't see the risk in doing what they do. It's a crappy ETF. Most of them are. The only ETFs that I like right now are JEPI and O, which is Income Realty. What's going on with Netflix? It was 109, it's now down to 96. It wants to buy Warner Brothers, Discover. And they beat out Paramount and Comcast. Comcast threw a fit. And next thing you know, maybe it's not going to go through. Great opportunity to pick up Netflix at 12.5% cheaper than it was a week ago. Good opportunity. They're overpaying at 72 billion, but it looks like, if I read everything today right, their price offer was $27.75 per share. Sounds like Paramount's going to up the ante and will do $30, saying they were not giving the proper opportunity to bid on this, and the Department of Justice will most likely make a rebid or stop the merger between Netflix and WBD, which is Warner Bros. Discovery. It would be monopolistic for them to own so much at this point in time. That's going to be HBO Max, Warner Brothers, and Discovery. Will be taken into it. It includes TNT and CNN, but I don't know, is CNN really worth anything anymore? All right, questions. I'm getting done a little early today. What questions do you guys have that maybe I haven't already answered? Any questions you guys have that maybe I haven't already answered? You guys have been kind of quiet tonight. Hello, hello. Are you there? How do I sound? Should sound wonderful. Any questions you guys have that I could answer for you before we get one more week and we go from there? Couple great questions. Any exciting opportunities on the horizon? We're going to go through that on the 5th of January. But yes, I mean, in all honesty, I really like going back to some of the dogs. If I was looking at rebalancing a portfolio, I would probably look to go into Ford. Sitting at $13 can run up to 27. Boeing sitting above 200 now, I believe. Let's take a quick check. Haven't been in Boeing for a while. Boeing, just above 200 at 205.95 after hours. Closed at 206. Disney, what a great opportunity for Disney to move back up into that 160 range. We are looking at General Electric, GE Aerospace. It's sitting at $287 right now. We believe that could get to 400. Google, we're uncertain of. We'd be looking at doing something for Google. where we would do a elite bull call, a stock replacement strategy. Looking at, boy, Johnson Controls is there. Probably not. Marvel, as I said earlier, Marvel might take the place of Micron, where we've had a Paul Barrick, a huge run up on Micron. Netflix is a great opportunity. Income Realty, is a great opportunity. I thought about PayPal, but PayPal's had horrific earnings, in which case I'm looking at possibly getting back into Block, XYZ. It also didn't have a great earnings, but XYZ Block at $61 to me seems a little more interesting than PayPal at $61 itself. Palantir is a good opportunity. I mean, we have a lot of opportunities that we see here going into next year, which is why we're probably going to be cash heavy. I bet we'll have a pretty good pullback at the beginning of the year. Anytime you have the stock market over a 3-year period approach 70% return, you're looking for a 20 to 35% pullback. It's a Fibonacci, Elliott wave, 50% retracement, or it's just simply herd mentality. Do you expect Netflix stock to split to make for any run up? Lee, it already did split 10 for 1. It was up over $1,000. Netflix is now down trading at $96. So the stock split has already occurred. And it already has run up to like 116. The fact it's trading at 96 is primarily news driven. So usually after a stock split, people sell off their shares and it goes the other way. It falls backwards. So I would not expect a stock split, even though it's cheaper. The people that have already jumped in, pushed it up to about 116, I believe, and now it's falling back as we have profit taking, and most likely the Department of Justice will step in and block the merger between Netflix and Warner Bros. Group, or Warner Bros. Discovery. Good question, though. Good. Are there any other questions? If not, I'm going to wish you a good night. I'll look forward to seeing you guys next Monday, and then we'll take on, in essence, basically 3 weeks off so I can spend my Christmas crunching numbers to find better opportunities so I can give a better answer for Nathan. Actually, good comment. At least said it's more affordable, so I just thought it might go up more. It was, and we got that 10% push up. You maybe a little bit more than that after the split, but for all intents and purposes, it's cheap. It's flooded, a 10-for-1 stock split. Most people can sell off 90% of their shares and have their initial investment still in place. So a big stock split more than a 3-for-1 doesn't run like a normal stock split of, hey, it's cheap, let's get into it. Because again, if anyone got in 10 years ago, they made 1,000% return. Their initial investment is only 10% of the shares they currently hold. Most people are taking profits. Great comments, though. Thank you for putting those in, Lee. That helps all of us better understand stock market movement. And all right, hey, guys, have a good evening. Pleasure being with you here tonight. Look forward to seeing you next Monday. Have a wonderful holidays. Have a Merry Christmas. Have a great New Year's. I'll say that again next week, but you should be excited for where your accounts are this year. We're going to run into next year cash heavy getting out of Micron and Bank of America. We're going to look for opportunities, and we're going to do a better job, Nathan, on the 5th of looking at where we want to add money after this expected pullback. There are a lot of opportunities there. as we made the comment before, you can't ever predict it. If we get some bad news this week, we're going to really enjoy getting into new positions starting Monday. I could really see Powell sticking it to Trump and saying, hey, no more rate hikes until I'm basic, or rate hikes. No more rate cuts until the middle of next year. And boy, we're going to have a buying opportunity starting on Monday, or starting in the next couple of weeks, if the market tanks from Trump and Powell having their little spat. So just things to keep in mind and to be made aware of. You just never know. In fact, Nathan's kind of new. I think I've had some people welcome you, but Nathan, welcome to our group. Understand, everything I might say tomorrow or today might change tomorrow morning pending news or something that happens overnight. The beauty of having to be in the market and paying attention every single day. All right, guys, have a wonderful evening. Pleasure seeing you here. Look forward to seeing you guys next week. Until then, just know we're always watching your account so you don't have to. Have a good night, everyone. Bye-bye.